Hello and welcome everybody to the live commodity market analysis with the Gold and Silver Club for the 13th of October 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we have a lot to cover. We'll be covering live market analysis. We will be providing you with a watch list of trading opportunities. We'll go through an overview of the commodity markets. We'll cover our top trade of the week. And of course, we will be answering any questions. Any questions, any contributions, do make sure you put those into the chat function, okay? So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 125,000 private traders from all over the world to increase their wealth, generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is at www.thegoldandsilverclub.com. Okay, so we will get into it, guys, and we want to have a look at how the markets are performing today. We've seen quite a lot of movement over the last 24 hours here. And the first thing I really want to point out to you at this point in time is we've had quite a considerable spike on the VIX over the last couple of days. In fact, so far today, we're up just under 6.5% on the day for the Volatility Index, which measures essentially fear in the market, volatility, and with that, we've seen an inverse relationship with stock market. So we've seen the S&P 500 starting to sell off and breaking through some key levels, which I'll show you very shortly on the chart. And we've also seen some support here for gold and silver. The US dollar index is positioned at a very interesting level at the moment on higher timeframes, following on from the minutes of the FOMC yesterday. So just if we have a look at a quick view here of the relative performance so far this day, you will note we're currently up on gold, silver for the day right now. We've seen the dollar start to sell off a little bit during the later part of the European session here. And as we go into the US session this afternoon, I'd say other markets which are worth keeping an eye on are certainly some of the agricultural markets like coffee, as well as cocoa, and also cotton as well, which had a 3% surge to the upside yesterday. Today, we'll focus more heavily on gold, on silver, and oil. But with that said, I'll move over quickly just to show you exactly what I mean with respect to the volatility index. So this is the volatility index, which has had a significant spike here to the upside over the last couple of days as we've continued to see volatility in the markets. And with that, we've seen that inverse relationship here, where if we go over to the S&P 500, we can see we've had a breakdown yesterday below the 100-day moving average. We're coming off a major resistance zone off the S&P 500 right now, where it has been breaking down the last couple of days here. And with that said, what does it mean for us as we go into the US session today and as we go into tomorrow as well? Well, essentially, increased volatility in the market is typically supportive for safe havens. And we are seeing gold and silver bid up slightly today. Now, if we take a look at the US dollar index, it's very important to note where we are in context with the US dollar right now. We have seen a significant surge over the course of this week, following on from last week's non-farm payrolls. I'm sure you've seen a number of currencies which have sold off inversely to the US dollar index over the course of this week, which includes, of course, the pound, which broke down yet again this week. Now, if we have a look on higher time frames, I'm on the weekly chart now. I just want to draw your attention to the fact that we have just come up to a weekly trend channel here on the US dollar index, which you can just plot on your chart very simply. You have the weekly zones here. We can see we've come back up, rotated towards resistance, the third test on that going back to April here. If we have a look at the US dollar index on a daily chart, it has come up to a major zone that we were targeting, which is a major overhead resistance level, major pivot level, and we're certainly getting in the overbought condition right now. And I think it is really overdue at this point in time a pullback. So it doesn't mean that we're going to have a full-on correction here for the US dollar. It could be short-lived, but certainly I would suggest, following on from the minutes of the FOMC yesterday, and given the spike that we've had today, which is very common to break above the previous day's high after a 3 white soldiers pattern, which is what we've seen here on the US dollar, and then start to see a rotation lower. We've also broken above the 11-week highs here as well, and I am expecting in the short term a pullback here for the US dollar. It's very overbought on a lot of our indicators, and if we do see that move, I do see that again in the short term being supportive for the metals here. Now, gold at the moment continues to consolidate. If we go over to have a look at the gold chart, last week we had a supportive zone which we came down and hit here around the 200-day moving average. Now, non-farm payrolls last Friday, we saw a indecision candle into the close. We whipsawed in price over the course of non-farm payrolls, and initially we surged. Then we saw a pullback back down to 1,200, about 42 US dollars per ounce, and we've settled really most of this week finding support at 1,250 US dollars. And for those of you who trade gold, the way I would really look at this at the moment is by positioning your levels here just above and below this doji, which was created by last Friday's non-farm payroll. So you've got 1265 resistance to break above, and for a break below 1240, that is also where we're likely to see some momentum pick up. Whilst we stay within this range, I think gold's not going to do a lot here, but if we do see finally a US dollar sell-off today, which it isn't on the verge of doing that at the moment, if we see that pick up momentum to the downside, I would then expect some support here for the metals. And then if we break above 1265, I would suggest we're up and running here for a short-term trade for gold. Now, I would suggest there is a fair amount of clean air on gold getting back up to approximately the 1280 to the 1295 zone in the short term. If it was to form a V-shaped reversal pattern base, break above the 200-day moving average and start to pick up momentum here, that is what I would look at as a potential breakout zone. Whilst we're within this range, if we do break below 1240, if we were to break that level, then yes, there is clean air to get a break back down towards the 1200s. That is within the zone where we would expect the next major level of support. Now, in the short term, the way I'm looking at this is for gold to, it has done well to hold on to support this week. The minutes of the FOMC have been relatively supportive for gold overnight as well. We've seen Asia essentially holding on to, well, the bid up gold here, and we've seen gold hold on to these prices, and we're looking to see whether during the US session today we can break above resistance. I see a short-term move here, so a potential to take it back up towards the 1280 to 1300 zone, but then I would watch out because very quickly we're likely to get into a short-term overbought condition on gold at this point, and I would still say it's vulnerable to sellers coming in on rallies. So it's something to watch out for at the moment on gold. I do expect the potential for a short-term breakout to the upside, which could certainly, from a short-term point of view, there are some points available if we do see a breakout. I would just be careful, not necessarily expecting this to be the bottom of this correction at this point in time. It's not fully confirmed right now. It could be, but it's still vulnerable unless we can see gold really pick up a lot of momentum and get back above the 1300 level. We'll be watching to see what the inflows are at the end of the week. We'll be very interested to see where the money managers sit in terms of their net long positions as we go into the weekend here. We'll be watching that very carefully, that data. Overall, right now, we're consolidating with gold. If we have a look at silver, silver has been actually one of the leaders over the course of this week. On Monday, we formed a hammer and rejection candle off the 200-day moving average, found support at the 50% Fibonacci level. Like gold, we've also been consolidating all week. We had a lift overnight. We formed a doji into the close yesterday, which essentially, as I'm sure a lot of you know, is an indecision candle where the bulls and the bears, they essentially took the price back to where it started the day. We saw a pop to the upside over the Asia Pacific session with sitting around 1755 right now, just consolidating. Again, I'm looking for the potential for silver to rotate back towards the upper end of its trend channel. It is basing here. You've got a V-shaped reversal pattern base. It just needs a little bit more momentum here to break and start to get above the weekly highs here. So I will be looking for more momentum to come in if we get a break above approximately 1785 here on silver, and then I would look for a rotation back up to 1850 in the short term and see whether there is any scope to go beyond that level. So that's what I'm looking at the moment. Downside risk at the moment on silver would be if it breaches, again, same as gold, if it breaches below 17 US dollars per ounce here, that could be the point at which we then just see more momentum pick up to the downside, and we could get a revisit of 1650 and actually possibly all the way back to the May lows here, which is currently sitting just under 60. I think $16 per ounce for silver would be a very good opportunity to pick up some longs. Just to give you the overall stats on silver at the moment, it still remains up 25% in 2016. So it's still in a bull market this year. It's still one of the best performing commodities over the course of 2016. After we've got number one is sugar. After that, we have orange juice. And we've also then got silver as one of the top performing commodities this year. So there will be a lot of buyers interested to get in at lower prices. And if we were to move below $16, I think that could be a great entry to pick up some longer term positions. At this point, we're still at a decision as to whether we're going to form some sort of intermediate base or whether we're going to move lower. I would suggest really in order for silver to have another wave lower, it needs to go higher. To go lower right now, it has been consolidating, but if we were to get a move back up to resistance here, see sellers come back in the short term, take it back down, that could be the sort of washout that silver would need to go higher over the course of the next couple of months here. On the flip side of that, if we build a V-shaped reversal pattern here, which has follow through and then goes on to not only break above this trend channel, but if we get a break back above overhead resistance here, so back above the 50 MA, that is where we could start to see momentum pick up here for sugar as well. So I would say short term, watching the US dollar index very carefully here to see whether, because we saw this last week after non-farm payrolls, developed a rejection candle, didn't follow through, and then we saw the US dollar roar back over the course of this week. So far, we're definitely seeing profit taking at the 98 zone. If the US dollar picks up momentum and starts creating lower highs, lower lows, especially if we close fairly towards the lows of the day today on the US dollar, that would bode well for support of commodities, gold and silver in particular. But if the US dollar turns around, breaks back above the 98 zone, then it's up and running for a potential move back up to 99. That will put more pressure on the metals. So very much watching the US dollar today. It is overbought right now. It is selling off from that overbought condition. And if it continues to stay like that, I suspect that will provide support, and also keeping a very close eye on the volatility index, essentially fear in the markets right now. Now, moving over to oil. So oil, we've continued to manage our long position over the last week and a half here. We've now banked 600 points profit on this trade. We've taken a really nice chunk of this position. So very happy about that. Where we're sat right now within oil, we're watching it carefully. We seem to be finding new support now at $50 US per barrel. So around this zone at the moment, we're starting to roll over a little bit here with oil, and we're also coming up to a double top, which is retesting the 2016 highs yet again, around $52 US per barrel. So you can see where we've recently just gone and retested that this week, had a bit of a pullback around that zone. Now, in terms of levels, I would like to pick up a buy on oil on another corrected pullback. I think right now it's sort of in the middle between support and resistance, where the upside potential, the risk to reward is not as good as if we were to pull back lower here for oil. We've got an OPEC meeting which is taking place at the end of November. We've just come out of a trade for 600 points, so we're not in a hurry to jump right back into oil. I would rather wait for retracement back into my buy zones here, which would essentially see oil come back to my buy areas, and then I would be much more interested in taking a position on. There might be scope to take on a trade around this level. I would go in at reduced exposure, half of what you would normally risk, going in based off this rejection candle forming from previous resistance, possibly turn support around 50 here. So continuing to watch that. I think the really big opportunity will come closer to OPEC meeting next month at the end of November. I would like to see a further corrective pullback in order to add a position here for oil right now. So at this point in time, the markets which I would really keep an eye on, I won't go too deep into the agricultural markets today. I'll just keep it really to gold, silver, and just keep an eye on the stock markets today. I'm watching these very closely at the moment. So you can see the S&P 500, if it was to break, I would say a major level here is going to be around the 2100 zone. So if we get a break below that level, we could start to see momentum pick up to the downside. Certainly we had a close below the 100-day moving average. We haven't had a move a close below that since July, actually since Brexit. So that is significant. We've rolled over from these trend channels, and there is further downside potential if we do see, obviously, the S&P 500 and other indices start to sell off here, especially American indices, when I would look to see where that capital is going to go next, and we could see it flow out of stocks and start to move into some of the safe havens, especially as the volatility index increases in price, this has a very strong inverse correlation to the stock markets, and also has a positive correlation with gold and silver. So with that said, definitely excited to see how this develops over the course of this afternoon. Today could be the day where we might get some good movement on the metals. They've been range bound throughout the last week here, so I'm watching out for some potential breakouts on these trades. With oil, we've got the oil inventories coming up this afternoon at 4 o'clock London time, which it normally comes out on a Wednesday, but it's going to be on a Thursday this week because there was a bank holiday over the course of Monday. So with that said, let me just move over to our top trades over this week. So in terms of the performance of our trades, our top trades over this week using our exclusive research-driven strategies. As we mentioned previously on these weekly recaps, we've been in a position with oil following on, and we actually had a position prior to OPEC off the back of the FOMC statement prior to it. We've added to more positions as we saw the OPEC confirm our buy stance here, and we've now benefited with 600 points profit in 12 days, just coming out of that position earlier on during this week, banking some decent profits on that. Now looking to get into a fresh entry in oil. Sugar as well, 320 point breakout that we've now come out of. We're starting to see sugar roll over. So if you do have sugar positions, or if you monitor that market, look at the potential for a pullback and a corrective move lower, and then for a buy opportunity as we progress into the later part of this quarter. I'm looking at pullbacks as buying opportunities, but I do think it needs to correct a little bit lower before going higher at this point in time. Now, as always, guys, if you do want to be kept updated with our trades and be kept at flow with the markets via the Gold and Silver Club, if you'd like access to highly profitable live trade ideas shared with you, ready to implement for results, do make sure you get in touch with us at www.jointhegoldensilverclub.com. Once you've completed the application form, we will get in touch with you ASAP. So it's www.jointhegoldensilverclub.com. Okay, who's it for? Well, essentially, whether you're a new trader and you want to develop a solid understanding of the markets and fast track your results, or even if you're an experienced trader but you're looking to take your trading just to that next level, then the private members live trading room is definitely something you should consider here. Okay, so it includes the following. So you get access to our exclusive live trading room webinars, so you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit points, profit, stop loss targets, as well as walk you through live trade ideas ready to implement for results. We provide email, SMS notifications which alert you when to enter a trade. All of those include details of where we are entering, exiting, placing our stop loss, trade management, and all of those are sent out in advance notice to make sure you've got plenty of time to get into positions to maximize on your profits. And you also get exclusive access to our proprietary trading research and market insights to help you boost your win rate and ensure you're on the right side of trade. So our research is really there to give you the ultimate edge in the commodity markets and fast track your results. So this is everything that you get by being a member. You get exclusive weekly live trading room webinars, which are also recorded. If you happen to miss a session, you get live trade setups ready to implement, real-time trade notifications by email and SMS. You get exact details of where we are entering, exiting, placing our stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, perfect. So with that said, guys, I wish you, of course, good trading. Have a fantastic rest of your week, and wish you all the best. And of course, we shall speak to you very soon. Okay, thanks, guys. All the best. And yeah, we wish you a great weekend too. Thanks, everyone. Bye-bye.